Good morning, everybody, and welcome to I'm new to trading spreads. Where do I start? My name is Gail Mercer, and I'm going to be your hostess for today. Now, before we get started, I would like everyone to take a moment and read over the Nadex risk disclaimer. And basically, you should never trade with money that you cannot afford to lose because all trading, regardless of what type it is, involves risk. Now, for those of you that do not know me, my name is Gail Mercer, and I am the founder of TradersHelpDesk.com. I have over 15 years of trading experience. I started out with a company that programmed indicators and actually became very enticed with the price bar. I do specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor to Stocks and Commodities Magazine, Traders World Magazine, and Top Shelf. I've also previously been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm the author of Trading Nadex Binary Options Using Currencies, Trading Nadex Binary Options, Keeping It Simple Strategies, as well as the New Trader's Guide to Trading Nadex Binary Options and Spreads. These books can be purchased either on my website or on Amazon.com. Now, I want everyone to understand the basic market concept. And basically, price will move in waves. I'm sure most of you have heard about Elliott waves or the waves of the market. What happens is price will make a high, then it will make a low, and then it will make a high. Well, these waves that are formed with highs and lows actually also create support and resistance. Anytime a high is made, that is going to be a resistance area more than likely. That could also be referred to as a ceiling, okay? Anytime price makes a floor or a low, then more than likely that will act as a support for price to go up. Okay, so if you can remember that the ceiling will act as resistance and the floor will act as support, more than likely, then you will understand the spread concept. Okay. Now, this is a typical spread, and the floor of a spread will always be listed on the left side of the spread. For example, on the euro dollar, this was for May 21st, the first number, 1.1730, would be the floor, okay? On the ceiling side, it would be on the right-hand side of the spread. In this case, it would be 1.1830. So this is the important thing to remember. If you are going to buy a spread, would you buy the floor or would you buy the ceiling? Okay. Now, let's go back to the previous graph. If you buy the floor, you're buying the support area, okay? If you're buying the ceiling, you are buying the resistance area. Does everybody understand that? In other words, when you're buying, okay, you want price to do what? You want price, if you are buying, you want price to go up, okay? Well, if you're buying the ceiling, this is going to limit your risk, okay? So do you really want to buy up here? No. This is where you would want to sell, not buy. Does everybody understand that? Any questions on that concept? So in this case, if you believed that the market would go up from this low, okay, you would want to buy, okay, because your belief is that the market will go up. Again, you would look at the floor because the floor is the support area, okay? So in this case, price is trading at 1731, so you would buy the offer, okay? In this case, that offer is at 1.1737, okay? So if you buy this at 11737, where is the floor price? The floor price is 1730. So what is your risk? Would be $7. Does everybody understand how I did that? Now, what is your profit potential? Your profit potential is the ceiling, okay? Because this says, okay, you can make up to 1.1830, but if it goes above 1830, then it is capped at this number, which is the ceiling, okay? So in this case, if you subtract the offer, which is where you entered, okay, then that would give you your profit potential, okay, which would basically be $93, okay? So you're risking $7 for a potential to make $93. Does everybody understand that? And that's excluding exchange fees. Now, how long does it have to make this move? The expiration time is at 5 a.m. Okay? So you have 1 hour and 22 minutes for this potential move to occur. Any questions on that? All right. What if you thought, well, I don't believe it's going to go up. I believe it's going to go down. Okay. In other words, your belief is that this area is going to serve as resistance. Okay. Resistance equals ceiling. Okay. So you're going to sell the ceiling that is closest to price. Does everybody understand? And in this case, that would be the number on the right-hand side, which is 1.1730. And you believe this will go down from that number. Okay? How much will you pay in risk? Under the bid column, you will see the price. Okay? And currently it's at 1.1725. So in other words, you're going to pay $5 in order to enter this spread. Now, everything else pretty much remains the same as far as expiration goes. You still have a 5 a.m. expiration. It still has 1 hour and 22 minutes until it expires. Okay? What is your profit potential? In this case, you would subtract your entry price, which was $117.25, from the floor, which is going to limit your profit. So that would be $116.30 or $95. Does everybody understand that? So on the short side, okay, that's what it's called when you sell either a binary option or a spread. We refer to that as shorting the market, okay? You're risking $5 to make a maximum profit potential of $95. And again, you believe that this area is going to act as resistance to push price down. Does everybody understand that? Are there any questions on this concept? Because this is what spreads are all about. And it's a great strategy for trading support and resistance. Okay, now, how is your profit actually determined? This is where the price in this column comes in. Let's say that at expiration, price was at 17.32, okay? Then you would have lost the $5, okay? What if this price was, let's say, 16.32 and you were short? Then you would have made the full $95 profit potential. What if this number was 1.1720 even? Okay, then you would have made $5 in profit. Does everybody understand that? Any questions on this concept? It's really, if you can visually understand that it is about support and resistance, and the ceiling price is going to act as resistance, and the floor is going to act as support. So this would be up and resistance would be down. It will make understanding spreads much easier. Okay. Okay, now, again, and this is just kind of like a repeat of what we just said. If you are buying a spread, the floor, which is the number on the left-hand side, is used to limit your risk. The ceiling limits your profit. Remember, that is on the right-hand side. So in this case, if you were going to go long on the euro dollar, okay, and it's 1.1780 to 1.1880 is your spread, then you are paying the offer price, which would be $3 in risk, and your profit potential would be the ceiling price minus what you paid on entry, or $97. But let's say that you are selling a spread. In that case, the floor will limit your profit and the ceiling will limit your risk. So in this same example, let's say that instead of going long, you wanted to go short, okay? In that case, your profit potential is $89 and your risk is $11. Again, you're using the red number, which is the bid, to limit your risk, and then the floor will actually limit your profit. Okay? Now, when is a good time to choose a spread? Well, market openings, because you get a lot of volatility. In other words, you want a big move, okay? Market openings typically will give you that big move. It's a very volatile period. Market reports are another one, okay? A market report generally will create volatility in the market. Great example is today at 2 p.m. we have the FOMC minutes being released, okay? That's going to cause market volatility, okay? You could also use it with leading indicators like hidden divergence, okay? Hidden divergence is a momentum signal, and it creates volatility in the market. So if you know hidden divergence, that is an excellent leading indicator to use for potential moves. And also historical data, which shows the average move for a specified period. That tends to be very significant when you're using a spread. For example, if you're trading a spread at 7 o'clock in the afternoon, historically, you don't have a lot of volatility at 7 p.m. So you may want to wait and do the 8 p.m. spread when you have the Asian opening, okay? Now, the three questions that I really like to ask before I choose whether to trade a spread or a binary is, what is my anticipated move, okay? And typically, you know, if you're trading market action, once you have a pullback, then you're entering on a pullback, you're expecting the previous high to be tested, or you're expecting the previous low to be tested. You can actually see, okay, if it will test the prior high or if it will test the prior low, what's the amount of pips within that range, okay? Additionally, what is the risk? Do I want to risk $80 to make 10, or do I want to risk $10 to make 50? Okay, so it's always a risk to reward in there as well. And what is the historical average for the period? If I'm looking at a period that generally only creates maybe a 5-pip move, I probably am not going to choose a spread, but would switch over and trade the binary, okay? Now, I want to go back and show this screen again, okay? And it's just to show you how to calculate your anticipated move. And let's use this one, okay? We have made a high right here. This is our previous low, okay? So this is about 20 pips, okay? Does everybody see that? It's right at about 1760. This is right at about 1740. So the distance in this is 20 pips, okay? But when you come and you look over here, you've only got maybe a 10 pip width. Do y'all see the difference here? So this one, to me, is a better one versus this one over here that's maybe only 10 pips. Do y'all see that? And this is what I do to say, okay, this is the high, this is the low. I'm expecting this low to be tested. What's the width of this range? And in this case, it was about 20 pips, whereas this one over here was about 10 pips. Any questions on that? Okay, well, since everybody understands this so well, I want to just provide my contact information. My website is TradersHelpDesk.com, and my email is gm@TradersHelpDesk.com. If you have any questions, you can always email me, and I can respond. But I would like to thank everyone for joining me today. Do you have any questions about the concept? As long as you remember, really, the ceiling is the one you want to sell, the floor is the one you want to buy, then normally you're doing pretty well with the spreads. Any questions? Well, thank you. I hope everyone has a wonderful day.